Ladies and gents, good morning, good afternoon, good evening. This is a new episode of Pair Trade Finder Pro, where we are analyzing the Pair Gold and SCCO, which are the tickers for Barrick Gold Corporation and Southern Copper Corporation, which are two companies in the mining sector. This is a trade we like a lot because these are fast and furious trades, giving us the profit in a very few days. If you follow our channel, you may argue we have shown some others even more profitable in absolute terms, but the peculiarity of the speed in this one is very interesting. We have $726 with an 18.15 return on margin in only 5 trading days. And if you extrapolate that to 1 month, you get a return on margin of more than 72% per month. And if you go further, considering 1 trading year, it means more than 870 return. So that's the power of this kind of operation. Of course, it's not realistic pretending to achieve such results month after month with only one pair for a full year, but you get the point of what I want to highlight. As we always do, let's proceed step by step, as if we were living on January 18th with the signal just being advised by the software, and let's check the whole set of parameters on our cheat sheet. So first thing is to check news. Then I go to NASDAQ website for gold, and what I observe around the 18th is that gold the day before gave a preliminary guidance and stated a decrease in gold production by 1% below its target. But at the same time, they got copper production slightly better than expected. The value dropped on the 18th and still got lower that date to this news. So this may arise an alarm, although with one full session to absorb the news. On the other hand, the fact that probably helped raising the deviation and hence the signal formation. So even if this could, you can think about it like an alarm, it's also this kind of things which forms the signal and what we like to observe. CCO, the only relevant thing around January 18th is availability of a set of options with an April expiration, but that's not big enough. So at CCO, in terms of new, that's a green. So we mark this with a green, and we continue with earnings and dividend dates. Gold earnings release was targeted to February 15th, so almost 1 full month away from signal. We mark it with a green. Gold dividend was November 29th, and no announcement was made after that, so this is also a green. SCCO earnings was February the 3rd, so this is problematic and this is clearly a red flag. SCCO paid dividends February the 13th, so almost a month since the trigger, so we mark it green too. So final conclusion is that in terms of news, we have some alarms in gold, but not that big to cause to get a red status, and on the other hand, a good reason for the formation. So this is a green. And as we mentioned, earnings and CCO are far more problematic, and we are going to mark this with the red. Finally, dividends were not problematic, as already mentioned. I then go back to the charts, and ratio chart was in a downtrend motion, so we will need to mark that with the red, but per momentum in each of the legs was good. Let me show you. In the price chart of gold, what I observe is an uptrending motion with a pullback to the 200 moving average. So this is a nice place to get in if you are going long. And in SCCO, the signal was triggered here. So after all this signal moving up, reversion back to media is quite possible. So per momentum in each of the legs is okay, so we mark that with green. Standard deviation chart shows the signal in what seems to me a support level if we pay attention to the previous lows, and that points to a reversion, very possible. And at the same time, deviation was made in an organic fashion during previous day. You can observe that here, how the price was growing for the previous 1 to 2 weeks with no significant spike. So we mark ratio chart with the red and per momentum with the green, and standard deviation again with the green. RSI was around 24, a low RSI that points to an oversold pair that translates into probability of reversion. So it's clearly a green. Correlation and co-integration. Correlation is at 75% and co-integration is 0.82, which is slightly below our ideal of 0.88, but combination of these two parameters is quite good. So we will mark that with a green. Volatility was above 2.3, but below our first limit of 2.5, so this is a green also. CAGR is above 26 and drawdown is below 8. This is quite good. This ratio, it's outstanding. So both parameters will be a green. So final conclusion of analysis is that the pair, while it contains two reds, it's a go in my opinion, because earning dates in SCCO on the 3rd of February, it is something that can be monitored as the date is approaching, and we can control it. It's under our control. And maybe exiting previous to that day if necessary. Now, let me in addition tell you that there is some other reasons or tips why I would go ahead with this pair. And these are in the back test. 9 trades in 2 years, 100% winners, creating a steady and growing P&L curve with no huge spikes, just pure consistency. We like these shapes. Average profit per trade is 656, which is huge. Keep in mind that at 400 we can see them there. Very valid trade for pairs with 4 or 5 trades. So having 9 trades with this figure here is an average, is very, very high. And finally, average days in trade is slightly above 10, which is also very compelling, because for 9 operations, these normally tend to be more in the 14 to 15 days average. And all those factors combined is what would have made me go ahead with the pair. So here comes the conclusion. Even if you think the trade with these two reds may be problematic, there's many variables that can reinforce the decision of going ahead. The only thing you need to do is train your eye to see them on the charts, as the software provides all luxury of details, and you just need to pay some attention to be able to discover them. And with that, the only remaining thing on my side is wish you very good and safe trading, and see you all in the next episode.